Let me begin with the official glorious hashtag joyant, hashtag jubilant hello to all of my good trading friends out there in the universe, or any friends I have in general. My name is Doug. This is Trade with Doug, and today I have a very special video for you. I will be talking a little bit about the CPI announcement and how that affects the market going forward. And also we're going to talk about how some of these small to mid cap stocks, or just underneath of the surface, the market breadth in general, has been quite bearish and weak for some time, yet the markets continue to make all-time highs. Is this something that we need to be prepared for as we move on for this month? We're going to talk about it. But before, as you can see on the screen, my friends, I have a very special announcement, something I'm doing for the very first time. That's right, I've done a lot of stuff, but this is the first time I've ever done a live Q&A session, a live webinar stream session right here on YouTube this Friday. Actually, in 2 days, 19 hours, 58 minutes, and 5 seconds, I will be doing a webinar with a trader who I respect, someone I've known for a long time and worked with for a while, Sylvia Bellrock. Some of you may or may not know her. You can easily look her up on Twitter or the social media here on YouTube as well under the hashtag name of Sylvia Bellrock. We're going to be doing this. It's basically a Q&A session. If it goes well, maybe this is something that we'll do every week. So we're going to field your questions about stocks that are important. We're going to do technical analysis, fundamental analysis of these. I put the link down into the description box for each and every one of you to register. So check it out. I think you're going to like this. I think you're going to be highly entertained with this. And I think it's something that you're going to find is different and new. And we'll see where we go from there. So be sure to register some of the stuff that we're going to talk about. Chart patterns, growing small accounts, high risk reward setups, all the good stuff. So, bring your charts, bring your questions, and let's do this thing. Now, let's talk a little bit about this inflation. Now, I've said before, inflation has been around forever. It's like $9 for a coffee now. I don't know what the Fed has been smoking for a while, but they've basically just been denying the fact that inflation exists at all. And if it does, remember we heard these words from Powell. I'm not making this stuff up. That if it was transitory or temporary, and it would figure itself out. And if it was, then it was not any harm or any of the Fed. The Fed was saying it's not their fault, or any of their monetary policies had nothing to do with it, which is total bullshit, and we all know that. So the cost of living posts the highest surge since 2008. So inflation is growing, and I think we all knew this. I don't find that to be the surprise. I think what you're seeing now, though, with the tone of the language today, is that the Fed is finally recognizing, or at least changing the tone of their language to admit, okay, there is inflation. Now, this is something that we'll always go through with markets, but I mean, look, we've been in quite a crazy year already. We look back and we've had things with everybody's got an asset bubble. We've seen asset bubble in stocks. We've seen asset bubbles in small caps, mid caps, large caps, no caps. We've seen bubbles in bonds. We saw bubbles in altcoins. We've seen the Dogecoin ordeal. We've seen the GameStop, the AMC type of ordeal. We've seen some crazy stuff in this market. We saw lumber up, 1,700%, which is now corrected and is negative for the year. So we've seen bubbles in commodity prices. We've seen bubbles across the board. With supply chain disruption during COVID, and also with I can't even remember, was it the Evergreen or whatever, the ship that got stuck in the canal? Supplies across the board in many cases are at high demand, so prices have increased across the board. To me, what's more important is always the technicals, is how the market operates, and that everything works in cycles. What goes up must come down sort of theory, and it always goes through its balance. Inflation has always been a concern with the market. I mean, maybe at this time here, we're at an unprecedented level of it. But more importantly, what I want to look at here first and foremost is the tech stocks inside of this NASDAQ. I'm going to move the daily chart here first. Most of you that know me for a while know that I'm big on emotional numbers. I feel that once a market or an instrument gets to a milestone number, I still remember the old days when I used to put the Dow 10,000 hats on, that you can kind of abandon technical analysis. And I really felt we were going to hit 15,000 in this indice, and maybe we still do, but we rejected today at a peculiar number of 14,994.50. It's a sweet number, right? Like 6 points shy of this. I think if we move through this, I'm interested in possibly shorting, or at least entertaining the idea. And for a couple of reasons. I know it's been one of the more difficult types of instruments to short, but I'm going to move to a weekly chart. And you see here we are on, what is this, 1, 2, 3, 4, 5, 6, 7, 9 weeks here, guys. 9 weeks of, let me change my color. 9 weeks here of just green. So if you were buying the indice on Monday and selling it on Friday, you've been on a 9-week hot streak. And you've seen similar behavior here out of the Dow, which let's go to the YMs here real quick. I'll put the YM up here. So this looks very, very aggressive, like it's going to break out as well. I'm looking at a weekly chart, by the way. Let me bounce back down to the dailies. It also looks very, very strong, so they still look intact. And here this one looks like it may want to reclaim 35,000. And then when you look at the S&P 500, it's the same story. These are series bullish looking assets. You may even want to just start typing in 4,500 for this one. No doubt they're all lofty, but they continue to find ways to move higher. And that's something that we've just continually have seen for many, many years now. And in addition to that, since Fed intervention with the markets, most of the times we've had corrections. If you go back and you think of the Brexit deal, the election, you had the 2018, if we want to call that a banking correction, where it really got aggressive selling there during the Christmas holidays. If you want to take that into consideration, and of course coronavirus, all of the markets have rebounded in just a series of months. So this is how the ever-changing markets work. I remember trading during a time where you had a 30% correction, and it may last that way for a couple of years, but it's a different environment. Now it's just a matter of months. So to make a long story short here, inflation is definitely a concern. At some point, naturally, people will back away from paying excessive prices for goods. And it's just always worked that way in the history. Even the dumbest of the dumb will finally reach a pinnacle and say, look, I'm not paying this anymore. These look to me like they're ready to be shorted. Well, let me take that back. Not ready right now, but they're lining up for that. And I think you just need a couple of good moves to really consider that. Now, when I say this, I'm not hinting that we're going through a market collapse or a crash. I'm not a doom and gloomer. The markets are engineered to go higher. I believe they'll continue to move higher. I believe this year will finish strong and bullish. But I think a 10% correction, 5% correction is in order. Now, something else here underneath of the surface that's been going on for a while is that the advancers are much lower than the decliners. Usually there are more stocks declining every day than are advancing. So there's only a handful of stocks that are responsible for this market holding up. Now, some of these we mentioned, and I got to take responsibility for this, so to speak. Some of the stocks I thought looked very good do not look very good, and I will admit that. I'm not super spectacular in any way. I'm a human being. I make my fair share of mistakes or my bad calls. I'm not going to be one of those ones that doesn't admit it. I mean, we all do it, but I have to say there was a lot of really sexy, sweet-looking chart patterns. Some I've done tons of videos on, but these small and mid caps that I mentioned at the beginning, guys, are absolute trash in my opinion. Okay, we'll run through the list, talk me out of it otherwise. Vuzi, for example, a stock I love. Really liked this stock, really thought we were going to break out. We had some great technical movement right here. We re-challenged that level. Really looked like money was coming back into that. No, it's right back down. Here's one of them. Mr. Foobs, the Fubo, another one that I've liked. Same thing, you get a nice little rally here. We saw some breadth come into this a couple of weeks ago, but here they are souring themselves and going the other way. You can put, I know people are going to get mad. Here's another one. This thing is now losing the sixth, has lost the sixth spot. And I mean, look how many consecutive down days. And I'm just going to bring some up that's in my mind, but you can run down the list. You can look at the FUVs, the old former runners. They're starting to peel back a little bit. Planter, PLTR. Many of these that that I have personally done videos on, they're going lower every day. They're just continuing to move lower. Let me see if I see anything else over here on my watch list that I may want to throw in there. I mean, even something like NEO here, just after this really strong rally, just fade after fade after fade. So when you look across the board and you see some of these cheaper stocks, if that's what you want to call them, mid-cap, micro-cap stocks, former Momo stocks, they're just not coming back with authority, and they're far off of their highs. Things like Mara, I mean, they're all the same. Tiger, I'm just now riffing off the top of my head. Some of these that I've done, I mentioned, I thought some of these were the best to buy. They're not working, and That's all there is to it. They're just not working. Now the question will be, what happens next? Do these stocks ever come back for a resurgence of movement here in the near future? And if they do, how does that impact the indices? Will they become in favor when the indices turn to trash at some point? And it's not just these. I mean, you look at things like Tesla. It hasn't had the best either. Sure, it's hanging in there, but it's not the Tesla of old, at least not right now. There's a lot of these stocks, even the bigger boards. I mean, mainly, if I could sum it up in my mind, what's been moving the market has been Apple, Amazon, Facebook, Shop, Adobe, a couple of those names. The rest of them have been that way. And I mentioned this stat before that it was a couple of weeks ago when the NASDAQ made an all-time high. Only 11 stocks out of the 100 were green that day. So what am I saying is that if you're stock picking and you're owning a basket of stocks, chances are you have a handful of trash inside of that, and you're watching these indices go higher. Well, that happens from time to time. It's nothing to be overly alarmed about. It's not like a once-in-a-generation thing. It's something that we see every once in a while. So if you're an active trader and you're quickly trading and you're moving in and out on a 1 to 2 basis, your best bet is to always trade these indices. Go with those. They seem to be the play right now, although they're kind of heating up a little bit or getting a little frothy here. These other stocks, they only have a shelf life of maybe 2 days. You got a couple of bounces here and there, and that's it. I'm going to give you two that I think are still holding up well, that are strong, free from any earnings or anything else right now. Skills was another one. I was just thinking, I'm sorry, I'm just rambling. I do like this ADSK. This is one I was in, I got out of. And mainly I got out of it again, because these things have been turning against you. You've seen some massive fades. And if I pull a 5-minute chart, let me just do this again. I hate to bounce around. But if I just go down the line at my list here, I mean, look how many of these had pulled off the highs from the day, like this one here, Microsoft down well off of its highs. Okta selling off here, Netflix pulling back. I mean, you see some deeper spot. That one held up pretty good. PDD. I should delete Apple. I mean, you can see these things having significant intraday pullbacks. Some of them just giving everything back. I think Roku is another one. So anyway, for the sake of time here, for me to keep rambling, if you're trading out there, if you're day trading or you're intraday trading, you've got a really quick shelf life on this. I'm sure you're starting to see that your trades are becoming shorter and shorter in duration. You got to go through that every once in a while. I would continue to focus on more of a scalping mentality or a super short time frame mentality until things clean up. If you're a swing trader, I got to be honest with you here, you should be lightening up the load. If you're one of those persons that are just naively not paying attention to this or thinking that the market always goes higher or that these stocks will rebound, you need to take another look at that kind of a strategy and really think about what you're saying and how you're thinking about this, because if these things do decide to correct, and I'm saying market corrections are just natural parts of healthy markets and environments. The markets will correct 10 to 20%, and at some point in the next couple of years, they will correct 30%. They do it all the time. But maybe sometime they don't come back. I don't know, but you've got to be a little bit careful here. You're starting to see these rug pulls. You're starting to see pieces of selling, consistent selling coming into all stocks across the board, where they're giving up a good piece of their gains, and that's, maybe it just passes and we're back to business as usual, but that's something that you have to know. And I mentioned this in one of my videos a long time ago about market corrections, is that there's always crumbs left on the table. Like, there's always a sign, there's always something there that's telling you, look, we're starting to get weak here. And if you look at these NQs, you got to sniff of that 15K, but you've had a couple of washouts here. Last few days, you've had some sleight of hand moves. Just pay attention to these. And the last one I talk about here, because I know I'm just burning up time, is I still like this WOW. If there's one I got on the money here, it was WOW. Really good stocks, been doing really well, almost 100% gainer for us. Still consolidating well, holding well today. So I like this one here. Keep it up there. I think it's still a good entry here at $21. Stop would be at 19 if you're entering here, but if you entered earlier, stops would be somewhere around the 16s. Anyway, guys, where do we stand here? Well, inflation is no surprise to anyone. I think it's going to be a bigger problem than what the Fed is leading on to believe. I don't believe it's transitory. I think it's going to stick around for a little while. I think we are in the midst of maybe the groundwork for some sort of a market pullback, 5%, 10%. I think there's a correction looming. I don't believe there's going to be a crash in this market, but maybe there's not. Let's pay attention to what we're seeing here. If you're a trader, again, day trading out there, keep them tight, respect your stops. Respect your stops if you're anybody. But if you're swing trading, I would seriously consider lightening up the load here, or really, really getting close to putting your stop losses very close, because you're not going to get much warning here. It's just going to be one of those days you're going to wake up and it's going to be 3, 5, 600 points, and it's going to spawn 5 or 6, 10 points, 10 percentage points of selling, and that's it. It's going to be pretty aggressive like this. Anyway, thanks a lot, guys. I want to appreciate it. Don't forget about the webinar we've got coming up here Friday. Really looking forward to your support. I hope you guys like it. It's something we'd love to do on a regular basis, but I think you're going to really enjoy what we have planned for you. So the link is down in the description box. Until the next time, trade well, take care. I'll see you soon.